What's going on, guys? My name is Dave. Welcome to another deeper dive with the Discord. If you're watching this at a later time, which you should be, unless you're in the Discord right now, click that description down below. We have a link tree, and in that link tree, we got the YouTube, we have the Discord that you can join. Check it all out, and if you want this screening setup, you're more than welcome to click on my link right there. You'll get this charting platform absolutely free, and if you decide to sign up for the Essential Plan, it's $15 off. All right, guys, let's jump right into it. $1,400 in less than 2 hours. All right, guys, thank you everybody for joining me. We got Bob Dan, the greatest moderator, live in the Discord with us today. His feet are soaking wet from Debbie, hurricane, tropical storm, Debbie rolling on in. We got Predator, we got Jimmy, we got Jordan C, my man, Covey. The myth, the legend, Covey is here. Norm, what's going on? And Red Baron, what's going on, guys? I'm glad you're here. I said this once, I'm gonna say it again. I'm gonna talk my ear off. This is gonna be kind of more of a chill thing. I don't want this to sound like a live, you know? I want you guys to feel, I want it to feel a little bit more relaxed, more chill. But what we're gonna be doing today, and at any time, if you have any questions, just butt in. Unmute yourself or throw it in the comments. I'll click the open chat right now. So if you guys have any questions and you don't want to talk, you can put them in the comments. Now, what we're going to be doing is some technical analysis on our ETFs so we can have a biasy on the direction. Now, you guys know that I don't ever say that I know the direction, but I do have biases. So if it gets to this area, you know, I'm bullish until this area, and then at this area, you know, I'll be more bearish. So that way I can have a tendency and a little bit more confidence in my confluency on which way the trades are gonna go, okay? Because most trades follow the S&P 500. So we'll start with the S&P 500. What I'm gonna do is I'm gonna delete this technical analysis, and what I'm gonna do, guys, check this out. I'm gonna move on over here, okay? I'm gonna hide the bearish sentiment that we have there, and then I'm just gonna mark out what we have. Dan Bob says, I ate Debbie's cakes. Yeah, dude, Debbie's delicious, delicious cakes. I like the cosmic brownies, but they have the new Oreo ones out right now. So yeah, there's that. All right, so here we go, guys. The first thing I wanna do, it's so simple. We could draw all these trend lines, we could do all these crazy things, but what I like to do is point out the obvious. And when I do that here, we can go right off the top here, okay? And we just click this. We can go boop, all right? And then we know where we have this high here, which is also showing a low. Now, we can zoom in here a little bit and we can see this high touches 1, 2, 3, 4 different times, right? And you can see over here, right before it breaks up, it hits it one extra day before breaking up through the pre-market. So this is a pretty good area. What I wanna do is bring it down just a little bit, remove some of these wicks, all right? Just to kind of show where the wicking kind of, just to bring it, make it a little bit tighter to this, okay? So we just have like an average here, okay? So this is the first area that I see. That's a very important area. I see a lot of areas of resistance, a lot of areas of support here. So I just mark that, okay? Then the next area I see where there's a lot of areas of support and resistance is gonna be this area, okay? So instead of like taking it right here or taking it right here, I try to find where the most spots are hit. So it's almost like right here, okay? 532, we could say 530, right? We could say 533, but I'm going right in between all of it because this is close, 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 4 times here. When it finally did break up above, it broke down. And then here as well, it gets very close to that. And then you have 1, 2, 3, 4. So always keep in mind, guys, when you're putting up your technical analysis, it's never this exact number, okay? Now, sometimes it works that way, like this one here. It came right up here, it hit that exact number and it failed, but it usually doesn't. Usually you're looking at a bigger area. So if I were gonna say my resistance in this area is gonna be between 123 and 125. That's going to be my area of resistance. It's a $2 or $3 area in this playing field, okay? So the same thing with this here. You can see this here, if we draw this line off this technical analysis right here, the playing field is going to be between 131 and roughly 531 to 533. Okay, it's a larger area, and that just goes to show, like, you got to understand, these are ETFs. This one specifically is a makeup of around 500 stocks. Okay, not every single stock is going to pull back, and not every single stock is going to pull forward and do it at the exact same time. It's very odd how a lot of them do. It is, but not every single one. So it's not going to be picture perfect with your analysis. Okay, so I just pointed out a couple of the major areas. There's this one, and then there's this one here. Okay, now we can zoom on over here, and I see another one here. Look, this is another channeled area, so we can take this area here too. So look, I'm just going to pop this one in here, and you can see 1, 2, 3. When it breaks up above, 1, 2, 3, 4, 5, 6, 7 areas at this 542.50. Okay, now again, 542, we could say 543 all the way to 540 is going to be your area of support and resistance. Okay, when is it support? When is it resistance? When it's above, then that is the area of support. If the price is below, it's going to be the area of resistance. All right, so right now our price is at 518. So these are all technically areas of resistance now. Okay, so let's go ahead and move on. Now, if we move over here without even looking at this, all we did was draw the technical analysis on the chart from previous day. Okay, and you've seen why, because these were very big areas of price action. You can clearly see these areas of price action because it's hit multiple times here. It's broke through, it came down, it showed its support. So we know this is a big area. We know this is a big area. We know this is a big area. So now we zoom on over here and we look, oh, look at this. This area here acted as support over here. You see how that works out? And then when it finally breaks through, look at this. It sliced through this area, which was very interesting. But look at this. After it slices through, and it comes back up, it touched this area. And if you guys remember in the Discord, I actually called out this area. I was talking about I think I said 531 or 530, somewhere in this area. I was calling this area out, and I said, we need to keep an eye on the S&P 500 because if it gets up to this area, it's going to be very interesting to see if it can break through this area. And when it started to finally come up into this area, I was watching it actually on the 5-minute. Look at this, guys. Now, of course, you can say, oh, well, you already knew, right? But I did this right here in front of you, right? We went to the daily, and I didn't even look at that. And I come over here and I mark these out, right? I just mark these out. And then if we come over here, we throw this on the 5-minute, you can see this area came up to here, it pulled back, it bounced, and look, it touched this area of 531.50. Exactly. It pulled back. Then it made a new higher low, and then it failed from there. What was I watching when this happened? Apple. I was watching Apple when this happened, okay? We get a big push up, we get a pullback, we get a big push up, and then when I seen it top here, it's a great area to short. Okay? So that's just what I was watching today when it comes to the technical analysis on the S&P 500. What does this follow? Most everything follows this. Now the S&P 500 is in the QQQs as well, but it's going to follow it, okay? So that's why it's good to know what's going on with your ETFs. If we put this on the hourly, you can see it. It's a little bit cleaner. Big push up here, big pull back. It's like we live in matrix of patterns. If you really think about that, so Dan Bob says it's like we live in a matrix of patterns. Now, whether you truly believe in that or not, you guys have to understand there is a lot of theory about patterns, and that's why there is string theory. If you think about it, like one thing's connected to another. There's vibrations, and there's there's just all these different. I don't think I want to get into it, quite honestly, but there's some truth into that, man. There's really some truth into that. That's why I kind of want you to get into it because this is really good stuff. Okay, well, take Fibonacci's, for example. The Fibonacci pattern, it might take me a little bit to find it on here because I don't personally use Fibonacci's, but a lot of people will say the Fibonacci's work, and so here are some patterns here. Maybe we can find it in here. There's Elliott waves and stuff like that. There's got to be fibs in here somewhere. Right here. There's fib circles, fib spirals, fibs wedge, fibs fan. Let's see, trend base, Fibonacci extensions, fib retracement. So if we go like this, and this might be kind of weird, but I'm just going to take this fib retracement and I'm going to pull it from the top, right, down to its previous base. All right, and you'll see in here these retracements, and these just go off of human psychology, not human psychology. Maybe I should look up the exact definition. This is why I didn't want to go too deep into it, because I don't want to sound like a fool, but there is a lot of patterns that are out there, and you'll find out human emotion follows a specific pattern, right? And people follow these patterns as well. So these big pullbacks, look at, where does it bounce? Right off this area, right here, a Fibonacci area of a pullback, right? And then it pulls below it, and then it bounces up and it holds this area above it. And then it pulls down below this area, look, and when it bounces up, it follows this area here, right? Now there's gonna be some outside the pattern of the retracement, but it's odd how some of these actually really follow these really, really well. And I just had a screen go out on me, so this might make it a little bit harder to access, but I'll try and do it. Adapt and overcome, right guys? Adapt and overcome. We're gonna do our best here. Can you still see it? No, probably not. Bear with me here. We're having some struggles on the... It's always something. Always something, guys. Hang on, guys. I'll get it up and running. Here we go. I think this works now. Okay, there we go. Sorry about that, guys. Yeah, but so this is just a Fibonacci retracement pattern, and you can see how it holds these areas, you know? And same thing as, you know, it's like we live in the matrix of patterns. There's so many patterns out there. If you hold, you know, certain sounds, certain frequencies up to a thing of sand, it's going to draw certain patterns. And my screens just keep going in and out here, guys. So just bear with me here. I'm doing the best I can to keep this thing up and running. They're trying to hold me down. It's not YouTube this time, you know. It's my actual computer screens trying to hold me back. And so also when it comes to the actual patterns, you know, that's why when we have the VIX volatility index, we can go back to that. That's why my buddy, when he trades, when this thing shoots up like a rocket and it starts to overextend, this is the fear. This is when everybody sells. This isn't usually when people are buying. So when people are selling like crazy, that's when he starts to buy. He closes his eyes and he just buys. That's what he does, because he is a longer term trader where we are short-term momentum traders. He's a longer term trader. So he just buys 100 shares of whether it's Apple or Amazon or Nvidia, and he holds on to those. And you know what he does? He sells to people, he sells puts to people, okay, who think it's going to continue to go down. So everybody that was fearful on these days, who continued to buy puts thinking it was going to continue to go down, he was selling to that fear, because he knows, he's been around long enough to know that this pattern is bound to come back. It never goes straight up, as we showed you in the very beginning of the show before we started this, that when we get these huge bouts of fear, which, as you guys know, there's an inverse correlation in the S&P 500. When this thing goes up high, we sell off quick. 2008 financial crisis. Right here is COVID. If you guys don't remember what COVID looked like on the S&P 500, you can see it's right here. Huge sell-off. The VIX volatility index goes straight up, COVID goes straight down, and then it pulls right back. Whether it's monetary policy, whether it's people down here buying up at the lows, whether it's whatever it is, there's always something that happens. There's always something that is there. Dan Bob says the patterns want to silence you. They do. Nobody, it's the matrix. They're trying to shut me down. They said, follow the white rabbit. But yeah, guys, so you have to understand that's why we have what I call a caveman brain, because we are, it is just in our abilities to look at a loss and say, okay, it's time to sell, right? It's time to sell. And look at a win, and instead of letting that winner run, we say, okay, well, we're up some money. We better take this and keep this before it gets away, you know? It's just part of our makeup, and that's why the market is so hard to train your brain in a different way, because we are all susceptible to these patterns, and that's why most people lose money. So if you can see these areas of confluency, if you can see these areas right here and follow them, the technical analysis will help you regardless of what your brain is trying to tell you. That's why we want a determined process. Okay, if you have a process and you can stick to it, that's the hardest part, is actually sticking to that process. Baron says you can't see the stream. You should be able to click my. Can you guys see my screen?
Yeah, I see the Fibonacci screen.
You're seeing a Fibonacci screen?
Yeah, the screen that you have the Fibonacci on, is that the one we're talking about?
Well, the Fibonacci's aren't up right now, but.
Oh, that's what we see.
You see a Fibonacci right now?
Yeah.
All right, hang on. Let me see. You don't see me moving the screen right now? All right, hang on.
Nope.
Let me do this.
No. To add to your last bit of the convo, herd mentality.
Yeah, that's a big one too. Here, let me reshare this for you guys. There you go. Is that better?
Yep.
Now I just blew it up, so now you can see the S&P 500 with 3 white lines.
Yep.
Yeah?
Yep, we good.
Roger that.
Okay, thank you guys. Appreciate you. All right, so back to it. Yeah, herd mentality. That's a great one to bring up. As hell, this is a great example. Herd mentality. When everybody wants it, everybody's buying it up. Everybody's buy. People just follow the rest of the herd. That's why things go parabolic, right? That's why NNE went as high as it did. You know, that's why when you see people selling, it's never. It's always you're selling the fear, and the fear sells things off much quicker, because herd mentality says, well, if these guys are selling, I better sell, and it's sell because of the panic. But yet when people are buying, it's buy slow until a ton of people start buying. Well, then I better buy too. Buy. That is the herd mentality. And people go too fast, they buy too fast, or they sell too fast. But 9 times out of the 10, if there's a lot of volatility, people are selling because they are fearful that they're going to lose money on it. Okay. So back to the technical analysis. The S&P 500 here came right up into this area that we drew today. It came right up into this area and it sold off. Okay. Did a nice little bounce back and then sold off hard. Okay. Filled this gap from overnight. Sold off all the way down here. So where's our next area of support? Well, here's the issue. The next area of support that we see on this is this low of the day, because it held. Okay, you see this? This is our base right here. That's going to be our next area, is this low of the day. And then beside that, guys, that's a big issue I'm having here. I would say my next area would maybe be around this $500 psychological and technical area. And the reason why I say that is because 500 is a very, very psychological area. And as well, this was our last low, okay? And you can see this was an area that it hit 1, 2, 3 different times, and it came down here and bounced off 1, 2, 3, 4, and 5 different times. So I would say this 500 psychological and technical area is gonna be the next area. So what I'm saying about this, guys, is this is hopefully our low, and this will be our new higher low. If it's not, we have a lot more room to come down, okay? Now, not to say that we bounce up higher and we find some resistance here, or we find some more resistance here. Say we bounce back up, we find some more resistance. So these are the biases that I look at in the morning, every morning, okay? And you'll see it when I'm live with Danny tomorrow at 8 a.m. You'll see when I go over the overall market, you know, I will have these drawn out and I'll say, hey, look, you know, we're below all the moving averages, except for the 200-day moving average. And, you know, my overall bias is that we hold this. But right now we're in lingo because we're away from this base, okay, this basing pattern, which is pretty cool because if you see where it caught here and we bring this all the way over here, you can see this is an area of support because you can see it's touched once here, once here, once here, once here, and once right here, and once right here. So look at that. And once right here, it looks like it's stalled out here. So this is also, this 510 is an area of support. Okay, so 510, then 500. But right now we're right in the middle of that 523 and this 510. So right now, I have no bias on which direction we're actually going to head. I really have no idea. But if we say in the pre-market, we come down here to the 510, my overall bias is going to be to the north side. I'm going to expect there to be a bounce. So if I find something, maybe a trend or a base breakout or something like that in play, I might want to take something like that. Now, I'm not saying that that's part of my strategy. I'm not telling you guys to take a trade, but I'm just giving you an overall understanding of the technical analysis in case you were to try new patterns. We always want to look at the S&P 500 first. We want to see the overall market directions, find a few biases, okay? Not try to predict, but have an understanding of where we can react, okay? So again, I don't know where this is going to go, but if it comes down to 510, I have a bias that it's going to bounce off this area and head higher. If this heads higher, I have two biases. One, it'll stop at 523 and head lower, or 531 and head lower. If it doesn't head lower and we break up higher of 524, then I think if we push higher on volume, we have the ability to get to 532. Okay, so those are my biases in the market. Those aren't predictions. Those are if and if statements. If this happens, then I will do this, or I will look to do this. All right. So this is what I see with the S&P 500. These lines are all correlated because of price action. Okay, I'm not even taking volume into consideration on this. I don't need to. Okay, because this is an ETF. These show prices and where prices are holding support and demand, supply and demand in them. Do you guys have any questions about that before we do another chart?
I wonder if you put the MAs and the 21 especially.
Sure. Well, we can put. Oh,
let's
sorry.
say nothing else. It's okay. And let's say nothing else bad happens. So no more war. Everything starts to get better.
Sure.
At what point would we expect to see the SPY catch up with the 21?
Okay. So that's a good question. So when you use the word like when can we expect, when can we expect it to happen? Just because there's no war doesn't mean that we're not going to have some issues with rate changes, the sell the news event, the overall tendency of people being uneasy with a new leader, with the election, with the dull buying and selling during summer. There's no reason that we could sell off more due to any other news that might pop up. There's so many things out there. That's why we don't want to expect to know when things are going to be better. What we can say is that if we see that in price action, we get a move that's higher than average volume, like we got this day. If we, in the next, say, 3 to 5 days, get another bout of higher volume to the north side and pushes us higher, that's when we can say, hey, this might be the area that's going to take us above the 21-day moving average. That's when we can start to kind of look a little closer and have expectancies, I guess you could say. But as of right now, even if somebody says, hey, there is no more war, Russia's pulling out and the Middle East tensions have fizzled out, everybody's happy and go lucky. That doesn't mean that America is going to say, hey, you know what? It's time to buy. No, they might say they're still willing to sell off. There might be something else that comes in. So until we see in the price action that we're ready to start buying, I can't really tell you for sure, But that's a great question. Everybody wants to know, when can we expect this to, finish? We could do a lot of different things to take some expectancy ratings, but this isn't, all for certain. So we've had a 9.68 pullback from this high. The last pullback that we had was right here. It was only a 5.74 pullback. And now if we go back even further, we can see that the last biggest pullback that we had was right here from 459 all the way down here. You can see that was 10.74. So the last major pullback that we had was very, very similar. So we'll just pull this again. So right now, the biggest pullback was 10.5, I think I said. This is 9.5. Okay, so that's very, very close to this pullback. This pullback here, we'll just pull this. This was 27.39 on this pullback. Okay, that was a pretty major pullback. This was after the monetary policy printing of all this money, and we had a pullback. Your average pullback is roughly 10%, and it happens every so often, right? So we go back, we could take this one. This one's 19%. Well, we could take this one here. We could pull this one back. Here's another 10%. You know, we could pull this one. That's another 7%. So, you know, these pullbacks, a major pullback, yeah, we're not going to count COVID. You know, we won't go back and count the financial crisis. This one here, pretty big pullback, 11%, maybe a little bit more. Now I got my screens bugging out again. Hold on, guys. Can you see my, can you still see my bar moving? Blue and green?
Yep.
All right, cool. So, you know, we can have all these expectancies. Personally, you know, I'm always rooting for our S&P 500. I always want to see this go higher. I don't want a bigger pullback. I don't want a huge sell-off. I don't want anything to be bloody. But of course, we have to have these pullbacks, because if we don't get these pullbacks, we both kind of know, if we don't get these pullbacks, we can't go straight up. This is not sustainable, right? The last this is odd, right? Like we don't get, this is just everybody has money and nothing can pull back, nothing can fail because everybody has money, you know, it just keeps going up. I actually remember Holy Diver, when I joined their Discord years and years ago, he was like, you know, look at this movement. Like if you take this movement here, right, and then you just move it anywhere on this chart, like look, it's like not that, like this is the biggest sustainable push we've ever, like look at this, like back here, like you don't see this anywhere, guys. Like there's nothing that is correlated to this kind of movement here. The only thing that is correlated is this one right here. Look, it's even higher. It even moves more straight up almost, you know? So we have to expect these pullbacks, especially with, you know, everybody having the stock market at their fingertips. It's a lot more volatile. Even the old guys will say that. Like, you don't see a multi-billion-dollar market cap moving it the way it does today. So when we get these pushes that are going straight up like this or straight up like this, we have to expect these pullbacks. So of course, this one being, you know, 26%. Do I think we're going to get a 26%? No, I don't think that. Is it possible? Of course it is. It just happened, you know? So we'll see. We'll see what happens. But what I'm waiting for is a follow-through day. And what IBD considers a follow-through day, you know, 3 to 5 days after we find a bottom here, is a nice push up on volume. And then some sustaining buying power should come in, and that will initiate a 6-month to a 3-year run. And if we can get that again, hey, let's do it. Let's make some money. You know, I'm with you guys. Until then, I personally like to short. You know, I like to short, but I gotta do it on a really small share size. I gotta be really careful when I do it. That's why I always say I'm a bear with bullhorns. Do we have any more questions on the S&P 500 before I move to the QQQs? So the QQQs here, guys, I'm just gonna do this all one more again for you, okay? So if I'm just looking at this without looking at anything like that, so we'll just take off the bear portion of this, okay? And if I look at this, the very first thing I see is this right here. It like sticks out like a sore thumb. This area and this area right here, kind of where it's sitting. So what I'm gonna do is I would just mark these out like this. I'd click this here. Well, we'll just shorten it so we know where we took it from. And we'll do this one here, just to make it really simple. So here, this is a channel, you know? This right here's a channel. You got this high and you got this low right here, okay? Another one that sticks out is this one right here. We can mark this one as well. So we got this high, 1, 2, 3, 4, like touched 4 or 5 times here. And then this where it came down and it bounced off this area. And this one roughly right around here. So I'll just mark this one out. And these guys, you just, after you've been doing it for a while, you'll just kind of see it. This one will go right about here. Okay, so we got this multiple times it touched, another time before it gapped up over it, and then a retest here. We could even bring it up a little bit more just to kind of, we'll just take out the highs and take out the lows, take out the highs. So that way it's kind of in the center there. Again, it's not picture perfect, guys. This is an area. This area would be roughly between 387 and 382. Okay, so, you know, $5 area there. All right, so now that we have our areas marked out, let's move over to the bearish portion of this. And you can see, kind of like the S&P 500, we have this top here where it came right up into, and it got ramped. Look at this. This is even prettier. Look at this. This is even better than the S&P 500. 448 right here, and I called this out in the Discord this morning. I plotted all these for you guys. Not that, you know, you had what you wanted to with it, but you can see this right here. It breaks down below. It hangs out in this area here for a while, and then it just fell off the face of the earth. It pops back up here, comes down. It gaps up, you know, in the morning, and it just gets stuck in this area. And then once it starts to fall, this thing was like a landslide. It could not get a bid after it started to pull back. Once it broke this area, it came back up and retested this area multiple times, but then it just slid on down. So that's why these are marked. So where's our area of support? You can see it right here, 432. 432.50 is our next area of support. So what's my biasy? Well, I would like to see it come back down and retest this area. Okay, so going back to the daily, so you can see why I punched this in. You can see right here, 1, 2, 3, 4, 5, 6, 7, 8 different times it touched this area. That's why I'm considering this an area of support. I would love to see this get supported because then it would create a new higher low right here. Okay, that's exactly how I found the S&P 500 the last time we bounced off there, because the S&P 500 at 500 right here, guys, I called this out beautifully. You know, we came down, we punched through, we made a new higher low right here at that 500 area as we were using this. It pushed up higher, it found its resistance right here, it pulls back, and look, it bounced off this the one time, and I even told you guys, if this bounces off this one more time, I'm getting in. And I did, and we made some money off this. This was a beautiful play, and this was actually before we were above any of those moving averages. So that's why it's like gives you a little clue before we get above any of these moving averages. Remember, it was right below the 21-day, and then we didn't have the cross. We weren't above the 50-day moving average. Well, the next day we had the follow-through day. And then the next day we were above all moving averages. And then 3 days later, we get the crosses. We get the 10 over the 21, the 21 over the 50. So it's kind of like a little, you know, a little cheat sheet right before it happens. It's not to say, hey, I'm full account here. This is to say, hey, things are looking good. Hey, we got the bounce, things are looking better. Okay, now we have the follow through day. Now I am risk on. And then we have here where we're like, okay, we're good. We're good, we're good, we're good, we're good. And if you guys remember too, I was like I was waiting for the pullback to the 10-day moving average. And I just kept waiting and waiting and waiting. And I'm like, well, I got to get full account here soon. So I waited for the clear of this high of day to get full account in my long-term account. We were taking swing trades down here. I was trying to wait for a pullback to the 10-day moving average to get in the rest of my long-term investing. If you guys remember that, that was fun. But hey, you know, that was that. So back to the QQQs. You know, we punch in all these areas, we come back, we take a little peeky gander at what's going on. If this were to break, if this area were to break, I would say 411, and then of course the psychological area of 400, even though it's not holding too much weight, that psychological area is always one to look at. So we're gonna see what happens here. Not only that, but we got a 200-day moving average, okay, that we would like to see hold, because my grandmother always said nothing good happens below the 200-day moving average, and I hold her to that. That is very true. Okay. So that's what I think about the QQQs. Now, do you guys have any questions about the QQQs before we carry on? We're only gonna do one more, and that's gonna be the IWM.
I have a question.
Sure.
I have a question I'm sure it directly pertains to this.
Okay.
I hear you use the term blow off top fairly often. What is that?
Yeah. So what they refer to a blow off top is when you get, maybe we can use NVIDIA. Let me see. All right, so check it out. Man, we'll use this one. guys. Appreciate your help, though. There we go. That's
Yeah,
what we're going to do.
that's what-
There we go. All right. All right. So
Very
back
good.
to the blow off top volume here. This is the one I wanted to show you. Okay. So we get this huge push up off the 500. We get a pullback here. We start pushing up again here. And then boom, we get this huge bout of volume. Now at the time, this volume probably wasn't that high, but it blows off the top, meaning we hit a new high and it starts going almost straight up here. SMCI was a beautiful blow off top. I actually called this as it goes parabolic. I called this the night before it happened, and I exited out of a lot of my position the night before because I was even telling the wife, I was like, man, I've made so much money on this trade. I would just feel sick to my stomach if I didn't lock in a lot of these profits. So I actually locked in 3/4 of these profits because we started gapping, and we started going parabolic. And then we had this huge bout of volume the next day. Well, this right here to me was like a blow off top. Like if we go any higher, any faster, that's a blow off top. And that's you can't really tell for sure if it's a blow off top until it's hindsight, right? You have to kind of guess. You never really know because look, the volume ramped up higher, 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 and before it blew off the top, you know, we were kind of guessing like, hey, this is the highest bout of volume here. Then in the pre-market, this went even higher. So I started selling in the pre-market as this went up higher right here. And then it just sold off like crazy. So that's what a blow off top is on volume. You'll see it a lot more in small caps. I don't have much of a, technically this was a mid cap at the time before this huge run up. But you'll see it a lot of times in small and mid caps. You'll see the blow off top rather than seeing it in the large and mega caps. Does that answer your question? I hope it does. I wish I had, if I was more prepared, I'd be able to bring some more examples for you, Dan Bob, and maybe I'll, when I come across them when I'm charting, I'll send them your way, okay?
Yeah, cool. Appreciate it.
No problem, man.
I'll send them a description on it from Investopedia too, by the way.
Perfect. Yeah. Why don't, if you have it up, you can read us exactly what it says if you'd like.
Oh, no problem.
You gotta read.
The problem is switching from remember, I'm on an old laptop. Switching from Thinkorswim to Chrome is a beast sometimes. Anyway, what's a blow off top? A blow off top is a chart pattern that shows a steep and rapid increase in securities price and trading volume, followed by a steep and rapid drop in price, usually on significant or high volume as well. The key takeaway with this is that the rally into the blow off could be based on news or speculation of good news, growth, or higher prices in the future.
I like that. That's one thing I didn't bring up is that blow off top is usually found or accompanied by a catalyst. So I like that. Appreciate you bringing that up and posting it in the chat for us. Thank you. All right. So any other questions on the QQQs or any random questions? Anything whatsoever?
Dave, if I can,
yeah.
If I can, when you finish this, I want to add something onto this chart conversation, just a very small bit that I think you'll find worth adding on to, and I'll do it after you're done.
Well, you can do it now. Well, this is open. Like I said, guys, we're chilling, man. We can talk about whatever. I don't care.
Oh, yeah, I'm sorry. I forgot that. I forgot that this was a more loose meeting.
It's loose, baby.
What I want to add real quick, what I wanted to add was that for everyone to remember that your chart doesn't exactly have to match Dave's chart or anybody's chart for that fact of the matter. But when you chart, it should be somewhere close to it. For instance, Dave has 4 lines on his chart right now. On mine, I have 5. Right?
You better not have 5.
And
dude.
the thing, I do because I saw some other channels. But the thing that I want to add most about the way that you chart, once you get familiarized with charting, is to keep in mind that there are a million other people charting in a very similar fashion.
Yeah.
And they're all trying to identify support and resistance levels. And a lot of these people are going to attempt to sell into resistance. In other words, like to beat everyone else selling off. So this whole charting thing, I always tell Dave, I really, really am fond of how he showed us how to protect our capital with the risk management, because it goes hand in hand with the charting. You could know how to chart and not do any risk management. And when you put the risk management with it, it makes so much more sense
Hell yeah.
because it allows you to be prepared to run against other people who are looking at the same stock you're looking at. And if you don't have risk management employed and you run into a resistance area that other people are more prepared than you to sell off in, you're going to wind up selling yourself short on profit.
Absolutely. That's a really good point, and I appreciate your the compliments that you gave me there. I mean, if we can show you a little bit about risk management, a little bit about technical analysis, all you need is a process. And if you find all of those, the last thing, well, really the first thing that you need, but in all, once you learn all those, you'll find that discipline is your final frontier. And that's my hardest thing, guys, is using discipline. Because you can know everything about technical analysis and risk management in your process, and you can refine it. But if you don't have discipline and you start taking trades outside your discipline, which I will admit to, I do it all the time, and if I could just stay disciplined, I would have way more money than I do now. Way more money, guys. It's ridiculous. It's seriously like a drug. And I like the way Danny uses the analogy. It's like putting drugs on the table, and it's just sitting there, like right in front of you. You're in front of a casino, and you got money that's in a digital state where you just see a number, it's like, oh, click, 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 click. That's why you have to think, I'm doing this for me, I'm doing this for my family, all that good stuff, guys, because we really do. We try to protect your capital first and foremost by learning risk management, and then finding a process. Technical analysis is king. I'm telling you, that's king. Price action is king. So yeah, all good points, Predator. Thank you.
Do you have a cup drawn out on that chart?
You want me to draw a cup on this?
Is there a cup over there on the left? Scroll
Let's
up.
see. Yeah, right here. This one.
Is there a tool for that?
This is the Market Smith indicators. The Market Smith indicators by Fred 6724. Yep.
It draws that for you?
Yes. Yes, it does.
I'll figure out why mine doesn't. Okay, cool. Thank you.
You don't see this on yours?
Uh-oh.
You might have turned off some things in your setup because it does that on mine too, and I turned off very few things.
Good damn code.
Well, I don't.
No.
I can show you.
Actually, actually, Kobe's setup didn't turn that off because it's on mine. That's what I'm saying. You may have inadvertently turned it off by mistake. You may want to go through that again.
They're giving Kobe a hard time because he's in channel with us.
I think he's helping his old man.
Oh damn! I should have followed that up. That damn Kobe never brushes his damn hair.
Damn you, Kobe! Oh shit! All right, guys, let's get back into this really quick. This IWM. So this IWM is very, very weird. Okay, it's very, very weird, and I'm gonna show you guys just how I would chart it. Okay, so if we zoom out here, I'm gonna throw this on the weekly, and you'll see why. It's way easier to chart on the weekly. Okay. The weekly kind of tells a different story than what you're actually seeing today, So let me just bring this back out here. All right, so let me clean these charts up really quick. Boop, boop, boop. Get rid of all this shiznit. So if we look at the weekly, and I want to do the weekly because we've done nothing but some sideways action on this chart, okay? So what I would do to do this is take this top right off the get. I'm gonna go boom, just like that. That's gonna be our biggest area of resistance, as well as this off the base. We go boom, right there off the base, okay? Then we can come down here, do this same one here, boom, just like that. And we can do this one down here, which, man, I hope we don't have to come back down and retest that, okay? That's just kind of what I'm looking for. Now, the only other thing, and I haven't been doing trend lines on here for you, but I'm going to do this now just because I really want to see this hold. Okay, so not only do we have this area, this top, that it's squatting right down on this $200 area, we also have an uptrend here. So if it breaks down on this, we have a very easy capability of coming down to 160. I mean, I could see this thing coming right down, like free falling down, because this was supposed to be the great rotation, people. I bought into it too. I'm still in this great rotation. I bought in about 20% of my long-term account up here, and I have not changed it. I have no reason to. I'm not afraid of it. I'm not afraid of holding on to this. But I like having 20% in small caps right now because this thing has been stagnant. It's been a lagger, and I still believe in the S&P 500. I still believe in the QQQs. I still believe in all of it. But what I want to see is the IWM not only hold this area, but get back and up above all of this. I want it to be the next leader, you know. So it's kind of on speculation here, but nobody, I don't know. We got time, you know. We got time to see what's going to happen here. But that's kind of what I'm looking for on my technical analysis for the IWM. But IWM's pretty boring, guys. It is. It's pretty boring. It's just been sideways up here. I remember it was a lagger here when everything was leading the charge to the sell side. This was in 2021. It started to come down. IWM did this blow off top, basically. You know, a big blow off top, cleared everybody out here, maybe got some more people in and just kept selling off. Then it channeled sideways. Even while the overall market continued lower, this thing just traded sideways. Then the market right around this area started to channel higher. This thing just kept trading sideways. It was just absolute bullshit, you know? And you know, none of your institutional ownerships are really get into this. You know, right before the COVID low, this thing, the highest it's been since its COVID low is 46%. Right now, it's currently sitting at 18.25. And if we go to the S&P 500, we'll put it right here, and we go pre-COVID, you can see this thing's up 51%. So I guess that's not too far off, really. You know, it's not too far off, really, now that you kind of like look at it in that sense. So 51% compared to where this is at. Well, this is technically right now, it's at 20%. Okay, so it is pretty far off. It's more than half. Let's just remeasure this here. Yeah, so it's more than half. So yeah, it's lagging pretty bad. It's lagging pretty bad. We still have twice the amount of growth in the S&P 500 than we have the IWM or the QQQs for that same example. So I'd like to see that thing explode. I really think if we continue to hold this 200-day moving average and all those areas that we pointed out on the technical pattern, I think IWM has a chance here. You guys have any questions on IWM? No? Okay. Do we have any questions at all whatsoever? It's open mic night. You want to spit a couple of rhymes? I can beatbox for you. Maybe we can get something new going.
What do you believe the market tomorrow, red or green?
Well, that is a great question. And I promise you this, if I knew for an absolute fact, we would all be rich because I would not hold back, okay? But this is what I was telling the guys right before you joined up. For the S&P 500, so when you say the market, I use the S&P 500 for the overall market. Right now, we're kind of right in the middle of two very highly traded areas. So this 525 area right here is right above where we are at currently, and this area of 510 is right below where we are traded right now. So I have two biases, Smide. I have two biases. If we come down here to 510, I expect us to bounce off this area. I expect if we come up to 523 that we'll pull back from this area. But if we break through 523, I think we can easily come back up to 531. So I guess I have three biases there, okay? How does that sound, Smite?
Sound crazy.
It does sound a bit crazy, doesn't it? Well, see here, I don't like to predict. That's the thing. If anybody's going to predict and tell you, hey, the market's going to go up tomorrow or the market's going to go down tomorrow, those aren't the people that we should be listening to because those are oracles. They're wishy-washy, fake bullshitters. And I don't want to bullshit you. I want to tell you straight up to your face, I don't know because I don't know. But what I can say is price action tells me there is support at 510 and there's resistance at 523. Other than that, I don't know what millions and millions of people are going to decide to do tomorrow. Okay? I really don't. I can only decide. There's only a few things that I have in control. Okay? The market is not in my control. But what I do have in control are how many shares I'm going to buy, how many shares I'm going to sell, what I'm going to buy, and where my stop losses are going to be. That's the only three things that I really have in control, okay? So with that being said, I would say if it comes down to 510, if you have something that you think you're gonna buy and it's strong compared to the rest of the market, relatively strong, meaning something like a Nvidia or an Apple or anything with a relative strength index above 90, then you buy it when it comes down here to bounce off this 510 using risk management, okay? Or if this comes up here and let's say we break through 523 and we get to 532 and you're looking to short something, this would be a great area for a pullback. But that's all in your specific time frame. So, you know, I really wish I could tell you up or down, left or right, but I can't, buddy. I can't. I'm not going to bullshit my way through this or lie to you, okay? How does that sound?
So, one more question.
Sure, go for it.
So the volume in the stock market comparing with last week is like live or more?
Are you asking if it's going to be as volatile?
Yeah.
Sure. So my guess, again, I can't tell you, because if there's news of war, say war starts to break out, you're going to see the volatility go nuts, right? But if things start to go down, if we look back here at the volatility index, 9 times out of 10, we're going to throw this on the weekly here, 9 times out of 10, you can see when the volatility ramps up, once it starts to subside, it usually continually and gradually goes down and then eases off. Okay, this is COVID, and this back here is, oh, I'm sorry. This was COVID. This was, no, was this COVID? Let me see. Yeah, this was 20. This was COVID here. I can see it better on the daily. All right, here's COVID. Here's the financial crash of 2007. And then here we are today, okay? So it pops up, heads up quick, and then it sells off, and then it usually comes down and starts to subside. So do I personally think we're gonna be as volatile? No, I think that was probably the most volatile that you're going to see the market in a long time. But again, if something crazy happens, it's out of my hands. There's nothing I can do about it. And we just kind of got to roll with the punches. So my best guess is we've seen the most volatile time maybe for the rest of this year. That's my guess. Okay. Any other questions?
The last question. The last question for me. Did we arrive to the bottom or not yet?
That's we went over all this, man. You better start showing up on time. I would like to say yes. I would like to say this was the bottom, but again, I'm not going to act like I'm some guru, right? I'm not going to lie to you and say that I know for sure. I would like to say yes. I would like to say this was the low. We measured and we do pullbacks here, and just from other analysis, usually your pullbacks, once in a great while, you'll get a 10% pullback, and we've gotten a 10% pullback here. Okay, so this is a strong area of support. If we break 510, I think we're going to go lower. If we hold 510, I think we can continue higher and consider this the bottom. Right now, for now, we've bottomed. But if we break 510, I think we can head lower to at least 500. Okay, so I'm not risk on yet. I am not risk on yet. I want a follow through day on volume, and I would like to be above a 21-day moving average before I go full risk on. But as of right now, I'm keeping a very close eye on things, and I'm playing off of these technical areas. Okay, so right now we're diddling in the middle between 510 and 523.
For me, I keep buying, but from last week to this week, I made over like $8,000.
Yeah, that's what you were saying, brother. I really like to hear that, man. I really, really like to hear that. I want to celebrate anybody's wins. I hope it was through process, and I hope it wasn't, and only you know that, but I really do hope it was through a good process, something that you can replicate, something that you can explain to people exactly how it is, what your process is, and why you took it that way. So congratulations on your $8,000 win, brother. That's what we like to hear here.
Well, thank you so much.
Well, you're buying the coffee tomorrow morning, now that you said that, okay? You're buying coffee for everybody tomorrow morning. So you better come off at least 20 bucks of that, all right?
Oh, that's not much.
Hey, I mean, it might be quite a bit to some people, man. 20 bucks is 20 bucks. I know people do some weird shit for 20 bucks, bro.
Yeah, it is.
All right, man. Thank you so much. Anybody else have any other questions? No? All right. I see Jordan C is typing in the chat. If I take a trade, do you think it's best to take the profit the same day? You know, that I would always revert that back to your process, man. If you're going to take a trade, you should know whether it's going to be a day trade or a swing trade when you get into it. Okay. You know, it's that simple. Now, if you're using risk management and it ends up being a day trade because it pulls back and it stops you out, then it was a day trade. But if you go into it saying this is a swing trade, I expect this price to continue higher, and you take it at a good support of an area and you give yourself enough space so that way you're not going to get stopped out in the same day, then you're going to play a swing trade. But it needs to be a part of your process. So for example, I'll bring up ASTS. When I played ASTS, my charts are kind of going bonky right now, but here's ASTS. I still have this drawn out for you. This was a swing trade, okay? So when I took this trade right here, we are on an uptrend. We have this downtrend showing new higher lows. When it broke out of this trend area off of this 10-day moving average, I got in right here at 1330, okay? I got in this using the low of day. I did not expect this to stop me out the same day. I expected to hold on to this for multiple days. So I got into this thinking it's a swing trade. Also, in this trade, we were above, for a very short period of time, we were above a 21-day moving average. My trade assessment says that I'm allowed to get into swing trades if we are above a 21-day moving average on the S&P 500. So because the stars lined up, I took this trade. Now, it really blessed me. The market really blessed me with a beautiful trade here. We exited half the shares somewhere around 14.80 or 15, and I held on to this last piece all the way up until this day right here, okay? So we made quite a bit of money on this ASTS trade. Now, I got into this knowing it was a swing trade, but also knowing that I had the inherent risk of it coming back down right after I got in to stop me out at low of day, okay? So with the question, is it best to take the profit the same day? I would say if you're looking at a trade and we are below these moving averages, I would say you should expect to take something out of the trade, maybe at 1, 2, or 3R, depending on what your strategy says. But I would take a piece of it out and then move your stop up to break even. But again, it all depends on your process. If you move your stop up, you have a more inherent risk to be stopped out, right? Because you're not giving it the room. But in a very volatile market like we are in, or like we have been in the past few weeks, you know, you push up, you take a little profit, you bring your stop loss up to break even. Now it's a win-win trade. You can't lose money on this trade anymore, right? You only can lose your unrealized profits. Let's see, he says, I took that same one on Monday and took 25% off it today. Hey, brother, that's perfect, you know? That's perfect. You're paying yourself, but you're letting the rest ride, and you're giving yourself plenty of room to let it continue. So congrats on your trade, brother. Yeah. Any other questions, guys? No problem, Jordan. I'm glad you're here with us, brother. Well, if we don't have any other questions, we actually, you know, I wanted this to be a short meeting, but you know, I tell you, we always have good questions. We always have people that pop in here and they're saying really smart things, really getting the wheels turning here. We talked about some pretty interesting stuff today, even patterns, you know, how we're kind of stuck in this matrix where we are all inherently taking certain patterns. There's certain patterns about our behaviors. There's certain patterns about how we do things. And, you know, there's indicators that show these things. There's fear indicators like the VIX volatility index that show when everybody starts to sell and we all start to get really excited. That's the time to buy. You know, we have moving averages because there are times where people want to buy in because there's There's different areas where people follow, different areas where people feel comfortable buying. And then, of course, the Fibonacci retracements we went over a little bit. Even though I don't use fibs, we're just trying to show you that patterns do work, and there's different ways of using them. We also went over the S&P 500, the QQQ, and the IWM, and the technical analysis. We also went over different ways of buying and selling. We went over a lot of stuff today, guys. And I just want to say thank you. Thank you for showing up. Thank you for being here. Thank you for putting in the work, even though we've had some pretty volatile days in the market, and we are starting to see some people start to fear the market. Now's the time to study, and you guys are here doing it with me. So thank you guys so much. I hope you have an awesome day. And remember, tomorrow morning at 8 a.m., as requested, we are going to have Danny live. We will be there 8 a.m. Eastern. If you guys want to see how he does it, I kind of do it pretty similar, the same way. So him and I will be bouncing ideas off of each other. We kind of do it in the background as well, but we'll be doing it live in front of you. It'll be fun. You'll see how we go through our scanners, how we set up our EPs, what we're looking for in the EPs, looking over the over fundamentals of the EPs, what a stock in play really is. And then, of course, he trades wildly different than I do. So maybe you'll get to see a little bit on how another successful trader actually takes these trades. And maybe you can implement them yourselves in your trading. So make sure you're here at 8 a.m. We will be live Eastern at 8 a.m., guys, to do a pre-market prep. And if we got enough people, everything's rolling well, I might just stay in there and do some live trading with you guys. So we will see you then, okay? Thank you guys so much for being here. Love ya. Bye. $1,400